Okay, guys. In my last video, I talked about why ETF investing is one of the options for long-term investors. Today, we're going to talk about one of the popular exchange-traded fund or ETF that is a VOO. This VOO is basically offered by Vanguard. So, and the main reason I have decided to make this video is like in the social media, mainly in the Twitter or into Facebook or mainly in TikTok with their small videos. People are recommending this one, but they because because like and there are so many things people are recommending, but like for just like anything else, I want you to have understanding of this one, understanding of what it is, what kind of product it is before buying it. Always do research and stuff like that. So because of that, I decided to make this little presentation. I'm hoping that this would be helpful for you guys. So before I start the any presentation, I have just a little important disclaimer here. The material that I'm presenting here is for the educational purposes only. You know, before buying any product, just anything else, you have to do your own research because you are putting hard-earned money into the investing, right? This ETF or any stock or Apple or whatever, right? You want to know what you're doing before just jumping into the feel is somebody recommended or whatever, right? Always do your research, understand what you're doing, and mainly to learn what it is. So, and only after that, make a decision. And this is just educational material, just learn about it. So, what is a BOO? So, BOO is exchange traded fund, basically ETF, that you can buy into a stock market, into from your mortgage, from your, the stock provider, whatever they call it. For some reason, your brokerage. I was like looking for that, your brokerage firm. You can brokerage like a Fidelity or Vanguard or whatever, right? You can buy, just like you can buy individual stock, you can buy this ETF. Anyway, the important thing is like why we choose BOO. We choose BOO because it basically tracks the S&P 500 companies. So basically, ETF is behind the scene. There is underlying stock. That's what it either tracks the sectors or tracks the underlying theme. For example, it could be like this cybersecurity related stocks, or it could be like finance related stock or whatever. So this BOO, the good thing about this, it basically tracks entire S&P 500 stocks. So it's really highly diversified. So some of the components as we'll see later, in this ETF is like our popular companies that we use. It's a product daily, for example, Microsoft, Amazon, Johnson and Johnson, whatever. Most of the companies that we use daily is here, either financial or healthcare or technology related or whatever, right? So why this ETF is ideal for passive investor. Most important thing is a broad diversification. I mean, like most of the time, as you might have heard, all these, people, hey, make sure you diversify your investment, because idea is like, in a given day, some given month, or given like in a quarter, some sector might do better, the other might not do better, or some would be really horrible. For example, recently, if you have been noticing, the healthcare sector is doing really, really bad. If you had invested all your money into healthcare sector, you would be down close to 25-30%. On the other hand, if you are diversified, your money is in the technology, money in the financials, or healthcare, really highly diversified, chances are you're doing really great. So that's why diversification is important, right? So basically, by investing in BOO, your investment is automatically diversified. So you don't have to worry about how to diversify, all those kind of things. The most important thing in when you invest in either in a funds managed by the companies, big companies, or ETF, exchange traded funds that you can buy and sell their product in a brokerage account, is the associated cost. This ETF is extremely low cost. For example, it charges you 0.03%, meaning, let's say you invested $10,000. At the end of the year, they only pay $303 annually for every $10,000 invested. Or let's say you have $100,000, you're basically paying like $30. So this is way cheaper than a lot of mutual funds, all the other funds, because they charge really. I don't know if you have invested in a mutual fund, you will see some of the mutual fund even charge you like a 2-3%, significant amount. It might not seem a lot if you have this amount of money, but as you have more money, and because of the compounding, that takes out a big chunk of your, I wouldn't say big, a significant chunk of your money. So we don't have to worry about that part also. So just general overview. Basically these are a little technical. I'm not going to talk about this one here. So for example, this is managed by the Vanguard, and then their asset is close to 694 billion. It has an expense ratio that we talked about, and all the different, and then dividend payout, and how it is doing, what is the pay ratio, all those kind of metrics, which we can learn it later on. So number three, why it is ideal for the passive investor is a steady long-term growth. So generally, like when you invest in the ETF, it's like you don't want to look at it into weekly or even monthly. Those you're not going to see much differences, right? It very fluctuate. It's because like as you already seen, it's underlying product is individual stock from the S&P 500. If the S&P 500 is doing great, this is definitely it will be doing great. If it's so so because of that, we have to always look for the long-term investment. Hey, if you have money for the long term and you don't want to be actively involved in it, you should put your money into this kind of ETF. So, for example, 10-year return, annualized return. So this annualized return consists of the capital, gain in the ETF at the same time the dividend that it pays out that we'll talk about later. So combination of that annualized return is 13.13%. It is really great because like generally this day, and if your money is in a checking account or whatever, right? The maximum they can pay, most of the banks they pay 0.001%, right? It's a checking account or saving us a little better. Or you can even like you put into like let's say CDs or whatever, they pay you they pay you close to maybe like 4%, right? But this 13%, its annualized return is pretty good. So there, since inception, it was created around 2010. The annual is like 14.08. So this is because like there is an idea called timing the market. I mean, as an individual investor, timing the market is very difficult, extremely difficult. You cannot just in and out from the market. Hey, you know what? After let's say I'm gonna it is right now really high. I'm gonna sell it, and then when the market goes down again, you cannot really timing the market. It's difficult. There are some people really savvy trader or investor, they might be able to do it, but not really individual investor. It's very extremely difficult to time in the market. And even the studies have shown that like people who just in and out make less amount of money compared to the people who, passively income, passively keep on investing, whether stock market is up or down, they're doing better. Okay, so another reason is a steady long-term growth, and then the low maintenance fee that we talked about earlier. So, for example, if you have invested in individual stock, you have to keep monitoring whether it's going up or down, what the company is doing, or how they, as the earning comes out, you have to worry about that part. By automatically managing by the Vanguard, you don't have to worry about it. So based on the history, you will be getting close to 13.3%. But it's always not might be that case. For example, some year might be even negative, but the other year might be 30, instead of 13, might be 26. But always looking at into the average. So when you invest in the ETF, the market gyration, like I said before, become less simple, relevant. You don't really care. I mean, like tomorrow market, let's say S&P 500 goes like a 200, 300, or maybe 5%. You don't really care because you don't. When you invest for a long horizon. You don't really, because the direction of the stock market has no really relevant to you. And then the other important thing is the compounding works in your favor. That as you might have heard, the compounding is the I don't know, whatever, the wonder of the world, because like, let's say that you invested like $100 first year, and let's say this ETF paying you end of the year $113, right? So now the $13 also started earning money without you doing anything. So that is what the compounding is. Your money, your money, extra money is making more money and more money. So that's why it's a long term compounding works in this favor. So what happens basically? So when you invest in this ETF, there is something called sector allocations. These are different kind of sectors that communication services or energy or financials. For example, all the banks belongs in the financial category. All the gas stations or the energy producer belongs in energy, and different industrial companies like SD or whatever, they belong to industrial. And there is something called the weight. So BOO are almost 33%, almost like one third of total investment of BOE is allocated into the technology sector. So you are not missing, for example, when they say technology sector, you will not missing any of those big companies like Meta or Amazon or Nvidia. Is basically, I will show you later what percent of this your money is allocated into different stocks. As a matter of fact, let's look into that one. I have this little code that should um, generate the Excel spreadsheet consisting of all the okay. As you can see right here, so these are all the different companies and the weight of the different companies and how much the Vanguard has allocated for different kind of. So these are all the 501 companies and what percent is allocated. As you can see, Nvidia is the biggest company of our time right now, and then it's almost 7.33% is basically by doing that. As you Nvidia is the hardest stock right now, so you're not missing all the gain from Nvidia. Second one in here is a Microsoft, almost like 7.03% is invested in Microsoft. It's in Apple, Amazon, Facebook. As you can see, all the top companies that we use daily, from most of these companies, either from the Dow Jones Industrial Average or S&P 500, they are overlapping, right? As you can see. But however, this is the percentage weight, and then as it goes down, as you can see, some of them is just for the diversification. It contains everywhere, but a lot of companies, those are like not that popular companies or whatever, so they are like highly diversified. But however, the way most of the money is eventually, even though it's an ETF, it's going into these big tech companies like Nvidia, Microsoft, Amazon, Meta, Facebook, you know what I mean, Broadcom, or whatever your favorite company is, it is already here. So because of that, also you don't have to worry about, hey, I'm missing something or whatever. You know what I mean? So basically, whatever. The other thing I want to show you, let's look at into the performance of this ETF. Here's the VOO ETF right here. So if you guys, I have this chart that this chart that goes from like 18 November 2024 all the way to up to date today. Like this is the range. The reason I want to show you this one is like if you guys remember when the beginning of the year when the President Trump administration came, they started with a lot of tariff and stuff like that. Because of that, whole U.S. stock market went down significantly, maybe close to 22% for Nasdaq, or even 25%, and I think 15 or 20, whatever percent for S&P 500. Because like hey, nobody was expecting Trump to come in and all those tariff. And what happened is, along with other stock, of course, like the VOO also sold. If you put this mouse cursor around here, like a 407, that was the lowest at that time. The stock was trading well, like close to $442. But as of now, this is the today, it has totally recovered, and not only recovered all the loss that it incurred during that time, but it also above that one. So the reason I wanted to show you this one is like this gyration within it happens all the time, but it always in the history of the stock market. It's always recover if you have a long-term horizon. You don't really have to worry about this gyration. It's all the way. Imagine this sell-off was crazy. This sell-off was really really crazy. This look at all this volatility. I remember this day right here. This was like when there was a Trump say something. We have agreement with China or whatever. On that day, it was amazing. Look at this big candle. Anyway, the reason I'm trying to tell you is like this always gyrates in the stock market. So even in an ETF like this, it's not but they recover, always recover. I wouldn't say always, most of the time they do recover. Having said that, if you're individual stocks, not all of them might recover. Some of them would never ever recover. You don't know. Maybe they go bankrupt or whatever. But that's not the case with the ETF, like a highly diversified ETF, like a VOO in this case. So because like even though it might not be extravagant return like an individual stock, like some of the stock have recovered, especially in technology and the AI related stock, almost 50, 45, whatever percent. But that's a risky. People are, if you're not used to taking that kind of risk, you just don't worry about, like I said, all this reason why you basically invest in the ETF like that. Okay, let's continue. All right, these are the sector allocations that we talked about. And then the also important thing is like the because underlying security, underlying stock, they pays a dividend just like that. This VOO, also ETF, also pays you dividend. For example, the last references, for example, here around June 30, 2025, last dividend pay was $174. So every quarter they pay you one just for investing there, $1.74, close to So for example, in a year, they 1.74 times for close to 600 whatever amount is basically allocated. Extra amount is allocated into your account, right? So the other thing to notice is like this most of the time this it goes consistently higher up. For some reason that was a little down, it was 181, 174, but if you look at into the higher trend starting from 2020, it's always going up, the payout for the dividend. Okay, because of all these reasons that I explained, and the other most important thing that keep in mind, don't listen, don't I mean like always do your due diligence. Like I told you before, um, always go into the company that's providing the product. In this case, it's a Vanguard. That's the VOEs are provided by Vanguard. They have a lot of good information here. Just go and learn, and finally decide. Hey, you know what? Then only after that you can go ahead and say, you know what, this might be better. I want to invest it here. I don't have time to, allocate large amount of my money into the stock market. I mean, like time into the daily day to day investment, or like kind of be a day trader kind of thing. I'm a long term investor. I don't really care about gyration of the stock market. If that is the case, is ETF is one of the good options. Anyway, that was my main point, and always make sure you do your own research. learn from the people and then verify, oh, whatever the information they are saying, is this correct? If that is correct, as you master all of this knowledge, and then you decide to buy, you know what, this kind of makes sense based on the research that I have also done. And so anyway, uh, give me a likes if you like my material and my content. If you learn anything about this VOO, you can, write, shoot me an email if you want. This is my handle email right here. Anyway, thank you so much, guys, for watching my content. Learn and invest. Thank you.